Good afternoon, everybody. Shelley here again. Now that we've sort of wrapped up our 2025 tax season for personal taxes and proprietorships, partnerships, small business, I just wanted to go through the new automobile rates for 2026. I didn't introduce this sooner, even though it was announced in January, because a lot of people have a hard enough time getting the vehicle and expenses correct as it is. There is nothing simple about the Canadian tax system. So I wanted to focus just on this, on the automobile deduction limits. It's worth it. And there's the link for you. And we're going to go into some detail on what it means for you. These increase in rates are long overdue. And as far as I'm concerned, I don't think they've gone far enough. I've given you the link here to the website so that you can see what the changes are and how they might impact you for 2026 as you're halfway through your bookkeeping year now, if you are a proprietor or self-employed or have rental income. So this is my YouTube channel. I try to bring education and taxes to you in a very simple form. What we're doing here with the vehicle expenses, they're actually attached to the business form about page 7 on the T 2021-25, and that includes a section for motor vehicle expenses, which we're only going to focus on that today. Okay, if you want to see anything else covered, just send me an email right there on the topic you would like to learn more about or understand better. So the following changes and limit rates took effect as of January 1st, 2026. So if your year end is January to December, this is what may impact you. The ceiling for capital cost allowances for class 10.1 passenger vehicles will increase from $38,000 to $39,000 before tax in respect of vehicles, new and used, acquired on or after January 1st, 2026. This $1,000 increase does nothing for us because, as we know, inflation's fluctuating again. We're back up to 3.2% because of the increases in fuel costs. And $1,000, it's really hard to even get a vehicle for $39,000. And that's where they cap it at. So no matter what, whether you lease or whether you purchase, you know, this is going to be your cost base, $39,000. And you'll understand more as I go through the forms. So the limit on the deduction of tax-exempt allowances paid by your employers to employees or for yourself as a small business person in provinces and territories is different. In provinces, it increases from 72 cents to 73 cents for the first 5,000 kilometers. So you have to keep track of your mileage here. And then over, when you get to 5,001 kilometers and up, it's 67 cents. Okay, an increase from 66 cents. Now that's for the provinces, okay? So make sure you're looking at the rates in the right area. For the territories, Northwest Territories, Yukon Territories, etc., the limit will also increase by 1 cent, so from 76 cents to 77 cents a kilometer for the first 5,000 kilometers, and then from 71 cents for each additional kilometer. The difference between the provinces and the territories is they're so far north, fuel is more expensive, maintenance and those sorts of things. This is long overdue from the days of 52 cents, okay? And I guess I'm happy to see this, but I think the cost base of a vehicle needs to be looked at, and I don't think they've gone far enough there. So those are the changes that you can claim. Okay, the following limits and rates remain the same as of January 1st. Okay, so for leasing, the payments are $1,100 a month before tax for new leases entered into on or after January 1st, 2026. Remember, this is 2026. Okay, it doesn't apply to you if you've had that vehicle before. You can't increase your leasing costs. Okay, it has to have been acquired January 1st. Okay, the prescribed rate to determine the taxable benefit of employees relating to the personal portion of automobile expenses, if they're using it for personal purposes and paid by the employers, it remains at 34 cents per kilometer for 2026. So what this means is if you let an employee use your company vehicle, and they are also allowed to use it for personal purposes, they have to track those kilometers and they get a taxable benefit of 34 cents a kilometer. Okay, for people who are employed primarily in selling or leasing autos, the rate used to determine your taxable benefit remains at 31 cents per kilometer for 2026. Now, I don't know the reasoning for this and that. The best thing is if you have concerns and if the tax system seems unfair and biased, talk to your MP, talk to your political representative, your MLA, and to get these things addressed and why. And be prepared to have data in hand and send a letter to the taxpayer's ombudsman. You know, he's there for us to help us and to advocate for us. So, and just track everything. But be prepared to submit copious, detailed records, okay? So the ceiling for capital cost allowance for class 54, that's a zero emission passenger vehicle. And you say, well, what's capital cost allowance? Well, capital cost allowance is the tax equivalent to depreciation that you can deduct for tax purposes. You cannot deduct depreciation for tax purposes. You can deduct capital cost allowance and the rate that it lets you deduct. You know, Revenue Canada, if you Google class assets, CCA, they'll give you a whole list. You know, class 8 might be miscellaneous equipment, class 10.1, passenger vehicle, class 10, you know, a trucking vehicle. All these things, you really need to look at it because they do change sometimes and you get accelerated write-offs if you're entering into a new field. So for zero emission, $61,000 before tax in respect of new and used vehicles will remain the same. Now, you know, we just looked up at above the slide before. Let's pop back there. I guess we can't on this presentation, but the slide above said for leased vehicles you're capped, right, at our purchased vehicles from 38,000 to 39. But if you're going to go into these new zero emission vehicles, they're giving you 61. And I've often wondered how these incentives affects the auto sector, right? You're going to get a higher write-off, excuse me, if you go with these new environmentally friendly autos. So if that, you know, that's almost a $30,000 tax saving. It's not 30, it's more like 20. If we're at 39, 40, we're at $22,000 tax savings over time. I'm sure it has input, you know, or influence, I would say. The maximum level interest deduction per month is $350 for new automobile loans entered into on or after January 1st, 26. So that's the same as prior years. You do get an interest deduction, but it's limiting it, okay? And I know sometimes if you're leased vehicles and what's the rate implicit in lease and loans, I mean, those loans, unless you get a deal coming in, I haven't seen the 0% or 1 or 3% lately, but it helps, I guess. So how do we complete this? Form 2125 for motor vehicle expenses. As I said, it's Chart A. It's an attachment to your 2125, which is the business form. This is not the 2026 or the 2026 form or the year 2026 form. This is T2125, year 2025. Just a coincidence there. In 2026, you're going to see some changes on this form, but typically what you have to do is you have to put in your kilometers that you drove for business and your total kilometers for the year. So you really need to keep tracking those kilometers. There's all sorts of devices now that are free or apps that you can download to help you when you're in the vehicle to track these expenses. So you guys come up with a method and it's just something you have to do. Okay, so for example, we'll get into an online presentation because it's easier, these forms, to fill them out manually. They don't calculate. So I just wanted to introduce you to this form and where it was. And then I'm going to show you in a software that I use. Okay, so you keep track of your fuel and oil, your interest, use Chart B below, your insurance, license and registration. I know in BC I think we have to pay for plates, new plates every year and stuff like that. Maintenance, repairs of the vehicle. If you're leasing, again, there's charts below. And electricity for zero submission vehicles. And any other expenses that might have occurred that aren't in here. Now down here you get your business parking fees because you get that 100%. It's not prorated up here. Okay, if they're business parking fees, you get to claim it 100%, okay? supplementary business insurance. Now this is for employees who use their vehicle and say they only have a restricted kilometers to and from work on it. If they are required to use it for their job purposes, your employer gives you a form T2200 and you have to top up that insurance. So then that extra insurance is 100% job and business related. So you would get 100% of the deduction by putting it there. All right. And then interest expense. They showed you how to do the calculation below. So let's carry on with that. So this is the chart C where it talks about the leasing costs for vehicles. So the total loss costs that you incurred for the lease you would put in here. Okay, the charges, sorry, and then the lease payments from the current, before your current fiscal year. So for example, this is 2026. If you had lease expenses in 2025, you'd put it there. Okay, so it's going to include that into the calculation, the number of days, fiscal periods, the manufacturer's list price. It's going to put a restriction. So if your lease adds up to $54,000 at the end, you are restricted to $39,000 on a class 10.1 vehicle. Remember, it depends on the type of vehicle. It says $38,000 here. That's because this is a 2025 form. It's $39,000 for class 10.1 in 2026. The new forms are coming. Okay, and then your zero rate, you're going to get the higher deduction for. And if this seems difficult to you, it is, because here now you have to calculate it plus the GST or PST, then by 85%. You know, these wonderful formulas that they're using to back everything out. All right, and now we're going to go on. Now, I like to use the software. It's way simpler than the CRA forms, and people get frustrated before they've even gotten through a page of these forms. So this is the software I use. I use Taxtron. I'm going to include a list at the end of the presentation of the 17 tax softwares that are certified by Canada Revenue. And you really want to do your homework here, because if your income is below a certain threshold, on some it's free, on some it's not free. You want to get the best bang for your buck, okay? So I use Taxtron. It's a software that I like. So here's the make of the vehicle, a 2025 Tahoe. It was purchased 2025-01, and it's a class 10. I drove 9,000 kilometers for business, 12,000 in the entire year. My business use is going to be about 75%. Okay, the expenses I paid for the vehicle, $3,750, repairs, $434, insurance, registration, those sorts of things, my parking expenses. And then allowable motor vehicle expenses. So basically what it did is it took all of those expenses up above for me, and it calculated that at 75%. I'm putting them in at 100%, and the software's doing the work. Everyone always asks me, well, do I calculate it based on what business you? I said, no, that's what the software does. Just throw all your receipts in at 100, makes life simpler. Track your kilometers, and there you go, 75%. Now, whether you're tracking your kilometers or your receipts, what's business to business is up to you. All right. I do know that typically when Revenue Canada sees business vehicle 100%, maybe you're in the driving business, that makes sense. But if you're at home and say you're a salesman and your wife, and as long as you have two vehicles, maybe there's justification for that. But if you're using that second vehicle for any personal purposes at all, Revenue Canada is going to charge you a taxable benefit on that, because no one gets to use their business assets for personal. And that's why up above when it talked about, the employer benefit portion, if they're paying you and you get to use it personally, is 34 cents. That's the reasoning behind it. Now, UCC, the beginning UCC, we don't have that in here, but we did put in the cost before taxes just to make it work. 34,000. It's proceeds of disposition. We're not selling this. It has not been sold. So that's if you sold it or traded it in another vehicle. Okay, so let's move to the next. Is it the last class sentence? No. So allowable portion of capital cost allowance. Remember how I told you that capital cost allowance is the equivalent to depreciation? Well, based on class 10, at 30%, and you're subject to a half-year rule. So if you took the cost of the vehicle, either divided by 2 times by 30, as an individual or a proprietor, you have to prorate it for the number of days, okay, during the year. In this case, it was used maybe 365 days. So yes, it's restricted to 50% of the cost of the vehicle, and that gets to be deducted against your personal income tax. So, you know, while there may be a benefit of using the vehicle for business purposes, I found it's very costly and my vehicle wears out, and I do not like to use my personal vehicle for business. So typically when I negotiate a contract with an employer, I'd say, no, you have to provide the vehicle if the travel is expected. Because the kilometers you put on in a year, I was putting on 24,000 easy plus, because I would be driving to rural communities around an entire province and Western Canada. And it's usually the lesser cost of the air ticket or the vehicle, depending on where you are. So, you know, think about it. This is just to show you the mechanisms and how the software can make it so much easier for you as long as you're entering the correct data. Now, I talked to you about softwares that are available. On Revenue Canada, here's the link. You know, I put this in alphabetical order. They have it at random. And what it helps you do is basically choose a software. All of these are certified, encryption, you know, protecting you. Just check the levels, the different thresholds. Sometimes they're all the same. You know, basically the first tax deduction threshold, you know, 36,000, 29,000. Everyone's different. So I don't want to quote any limits. I just use Taxtron because I use it for both personal and the T2 corporate program. Found it very friendly. I've used UFile. I don't like it because they're going to make you pay right away no matter what. If I have taxpayers, you know, seniors, if I have students, if I have, you know, people with disabilities, people, you know, living on a pension, restricted income, I don't want them to have to pay for software, you know, so save your money as you can. And I hope that you've enjoyed this. Please let me know your comments. If you want to see something else, I am going to go through the home office expenses as well in another presentation. I'm going to slowly go through these now. We're in the 2026 year. Most tax deadlines have passed. If they haven't for you, seek out your accountant, and because the penalties of not filing your taxes on time are pretty significant, and so is the interest compared to what we earn. So have a great day, everybody. Bye.